I'm joined now by current affairs commentator Einar Tangen out of Beijing. Einar, thanks for joining us. How do you think this trade war might affect the U.S. China relationship, not just short term, but more long term?
Well, I think you have to go back to the strategic document that was released a year and a half ago, saying that China is viewed as a long-term competitor. This was a strategic competitor. This is something that has really changed the whole tenor and tone and future of the relationship between these. Francis, I tend to agree with Professor John Gong's assessment that there has been a fundamental change and that this will be going for impacting the relationship in the future. And what I would point to in particular is, despite all of the talk that's been made by the U.S. side, there has been no concrete proposal to solve this particular issue. And, China is a little bit perplexed. They keep saying, well, what do you want? And the U.S. says, well, we want the deficits reduced. But there's really very little way to do that, except if U.S. consumers stop buying more and more Chinese goods. Unlikely, given the fact that their incomes have not risen in real terms in quite some time, and they need cheaper alternatives.
And Einar, one of the academics that we saw in that piece said that this trade war isn't quite as bad as what we saw during the financial crisis 10 years ago. What do you think of that assessment?
Well, I think in the short term, you're absolutely right. But I mean, if you have the U.S. asserting that this is going to be a long-term situation, it's going to be very, very hurtful to the economy. I mean, outside think tanks believe that 2/3 of the goods that are actually imported into the United States have foreign capital. A lot of that is the U.S. side. So that can be readjusted. But trying to change the global supply chain and push China out of it, I don't think that's necessarily going to work. This is not like instituting the Plaza Accord that was in 1985 against Japan when it was threatening to grow large. China and the U.S. are fundamentally different. In 1985, the U.S. was very, very dominant. Japan had no alternative. Today, China has many alternatives. It's the #1 trade relationship with over 120 countries. It is a robust economy, and even though both sides will hurt, if there's a 0.1% change in the GDP of these two respective countries, just remember that impacts the U.S. twice as hard as China because of their relative growth rates, 3.5 versus 6.5.
And Einar, we're starting to see the impact of tariffs on small businesses, in particular layoffs, shutdowns, and the like. Does China hope that that could put more pressure on President Trump to possibly reverse course?
Well, it's not even a question of hope. Definitely these were targeted sanctions, but the fact is, there's no way around it. If there are tariffs from the U.S. side and China responds, of course, small businesses are going to be the ones that are hit. They were the ones that are more nimble. They were going into China. They do not have the kind of capital reserves that large entities have. They can't readjust their supply lines and things like that. I mean, you recall the television station in North Carolina, which had to shut down because it's no longer competitive. These are the kinds of things which Donald Trump is actually forcing. He's putting the tariffs on China. He's the one who's actually forcing them into, in some cases, bankruptcy.
All right. Einar Tangen live for us in Beijing. Thank you so much.